Welcome to Open Door Veterinary Collective's Lunch and Learn series. It's a quick drop-in where we explore practical solutions that organizations are using to address barriers to accessing pet care and resources in their communities. I'm Amy St. Arnaud with Open Door Veterinary Collective, and today my colleague Heather Cammisa is going to be talking about ways to stretch your subsidy or your donor dollars for veterinary care to help more pet families. I know this is a hot topic right now, especially with more people struggling to afford the cost of care. So we're going to get started right away because Heather's got lots of great stuff to share. Go ahead, Heather.
Wonderful. Thank you, Amy. Thank you, Maddie. It's fun for making this possible for all of us to be together. We have a good bit to cover, a lot of statistics and research and strategy. So some of it we'll go through a little quickly because you will have access to the presentation afterwards. So welcome, and let's get started. So welcome to this leg of the Doors Wide Open series. And we're really glad that you're here. We're going to talk about how to multiply existing donor dollars for veterinary care in your community. This was the description for what you've signed up for today. So we will share the statistics that describe the crisis in accessing veterinary care from a credit and cash flow perspective, and again, offer practical tools for mitigating that. We're going to share some research that we've done and that we have actively underway and give you some insights from that research. We have a thank you for joining us. And if you are joining us today or through the end of April, we will get a list and we will be pulling names for a scholarship to a DVM 360 Fetch conference and a scholarship to an upcoming course from Open Door, which is the Spectrum of Care course. So look forward to talking with some of you about those. Open Door Veterinary Collective, who are we? Hope you'll go to our website. Amy's going to drop that in the chat. We are a 501c3 nonprofit. We do online training, one-on-one mentorships. We do research, innovation. We have a whole social work hub for integration into social services and community programs. And we do collaborations, all with a focus on expanding access to veterinary care, accessible pet services, while making sure that all of this is a sustainable, ongoing system of delivery. We are part of the Maddie's Million Pet Challenge, so that may be something you want to look into if after this presentation you might like to do a one-on-one mentorship talking about business model solutions to expanding veterinary care. We are also the home of pethelpfinder.org, so we very much hope that you'll list your services on there. We're doing a lot to get benefits and perks for people doing the work, like those DVM 360 scholarships. We actually have 20 of those this year for Pet Help Finder members. So it's a growing database to connect the community to you so that everyone is not bearing the entire load, spreading it out so that people know where else to find services in communities as well. The short story, in case you have to leave or I go long, the short story is adding payment options that are disassociated with a hard credit check at your clinic and offer terms beyond 6 months is a really powerful way to expand access to care in your community with existing monies that you have. Connecting other clinics in your area to expand options. And you'll notice I have an asterisk next to payment options. And at the bottom, those are internally decided, but externally managed. We want to be really clear, make sure anyone that drops off knows that we are not recommending that you add in-house payment plans at your clinic or to local vets in your community. Next, combine your donor funds or discount dollars if you're a for-profit clinic with a payment option that is disassociated with a hard credit check. So triage people who just needed something that wasn't dependent on a hard credit check, then add your donor dollars or discount dollars to say, what kind of payment can we get you on that you can afford? And really reserve your full subsidy for greatest need, whether that's working with unhoused members of your community and their pets, domestic violence, and so forth. And then certainly building your team financial fluency of your clinic team and in your community, and developing strategy about when and where to deploy these tools. That's the short story. So the why on adding these payment options. No discussion of access to veterinary care should really start without talking about this wonderful report that came out in 2018. Sure, many of you are already familiar with it, if not everyone. But we had the statistic that 27.9% of pet families reported an inability to access veterinary care, needed veterinary care in the past 2 years. The primary barrier across all ages, income levels, household types, and geography was financial. So the first bullet I want to put there is cost. Cost is a subset of a financial barrier, but yet when we have a lot of the discussion around these issues of people being able to afford veterinary care, we only talk about cost all too often. That's what appears in reports or focus, that we have to provide everything for free, or, there needs to be all these deep discounts. And certainly there are those that need that. Certainly there are statistics out there that abound about how much the cost of veterinary care has outpaced, insert your price indice of choice, over X period of time. So there's been a great growth in the cost of veterinary care. And that's not just for the consumer, that's also for clinics. All of you who run clinics know labor, labs, other vendor costs have gone up quite a bit. But cost is a subset of financial barrier. And so the way we give people to pay a bill is also a financial barrier. So I could say to you, hey, for $100,000, you can have a house on the ocean with an orchard and a pool and $100,000, but you need to pay it this afternoon in cash. Well, there went this great deal out the window because a lot of us couldn't pay. It wasn't that that house wasn't affordable, maybe, but if you didn't give us a better way to pay for it, we wouldn't be able to take advantage of that opportunity. So asking everyone who's out there, and I can't see how many people we have here today, what payment options are common at veterinary hospitals in your community? So cash, existing credit cards, what else do you see being commonly offered to people who can't afford to pay upfront for a veterinary bill in your community? So please type those in the chat.
Heather, I'm seeing a lot of care credit.
Okay, care credit. So care credit is the most common. It's in about 70% of veterinary hospitals. Scratch pay is way up there. It's in at least a third of veterinary hospitals. Those are decided by those companies, whether or not the person qualifies. They do pay your clinic within a few days. And most commonly, we see clinics offering about 6 months. There's plenty of others. I have a slide at the end that lists all other, not all other, but many of the other payment tools out there. But they work by, they decide whether someone is eligible for it or not. And we're going to talk about why a lot of people from any of these are not approved. So we work with clinics at Open Door that have 20% approval ratings for a lot of these tools that are pretty common. And so there's a lot of situations left behind. So we'll talk about this some more. Thank you for your responses. Pet insurance, that comes up as, about 3.5% to 5.5% of pets in this country are covered by a pet insurance policy. From a payment mechanism term, a big challenge is that most of them are reimbursement models, meaning the person has to have the money up front. And that is a big challenge when a lot of people don't have reserves and many people live paycheck to paycheck. And then the last bullet on this slide before we get into some of the stats and numbers is the industry's reaction to the term payment plan. And that's why we really try to talk about payment options so that they don't all just get lumped into being a payment plan. A lot of veterinary hospitals feel that they've been burned, or it takes a ton of client CSR time to reach out and collect payments. And, So there is a harsh pushback. So as you discuss this in your community, certainly would recommend you discuss it as a payment option, even though even the one company describes their product as a true payment plan, but they manage it. It's not the clinic's team making the phone calls. So just something to put out here at the beginning of the conversation. Want to make sure everyone here is connected. New data was released last week, Gallup poll. Thank you, PetSmart Charities, for leading this. And if you haven't seen it, we're going to drop the link in the chat. And so 52% of US pet owners have foregone recommended veterinary care, with 7 in 10 people saying it was financial reasons why they did not. Couple bullets. About 2/3 of pet owners say that if their pet required life-saving treatment, they would be able to pay for the cost of the treatment. That they'd be able to pay would be about $1,000 for life-saving care. 3 in 10 report that a friend or family member's pet died in the past 5 years because they could not afford treatment. It's a whole nother conversation, but I think this could have a continued chilling effect on people having a presumption that they can't afford veterinary care and not going and seeking things before they're showing up at all our doors as emergencies, PIOs, parvo, you name it. 64% of all US household pet owners say that if their veterinarian offered them the option to pay the cost of life-saving care over a 1-year period through an interest-free payment plan, they did use the word payment plan, they could at least double the amount they previously said they'd be able to afford for care. So just giving people a payment option, they could double it. So it wasn't just the price tag, it was how they're able to pay for it. I do want to let our Canadian friends know that if you're on the call or you're watching this, PetSmart's going to be releasing this sort of data for Canada. They did study Canada as well. So I think it was June that'll be coming out. Financial fragility. A lot of people say they can't come up with $2,000 in 30 days, whether that's a vet bill, household repair, car repair, you name it. And we see it across income spectrum. So a lot of people don't have a reserve, and you hear this statistic in all sorts of ways out there, but there's plenty of places to grab these stats as you make your case statement internally or with your donors, your board, or in your community. And importantly, there was a JAVMA study that came out that financial fragility was prevalent among most pet owners across all income brackets, and that financial fragility was found to impact that perception of ability to access care. And that was in my community. So we have a body of people that even when we add these payment options, we're going to have to do a big marketing campaign to let them know that these are now available. People don't have cash. So to pay these bills, nearly 6 in 10 American workers live paycheck to paycheck. You'll see this statistic go between 40, 60. We even saw it up as high as 70% among millennials reported 2 years ago, which I talk about. And I talk about that with millennials because we know that if we look at the pet owning pie, the largest age cohort of owners are millennials, meaning they own, I think it's 32% of the pets. So it's really important what their financial dynamics look like. For our Canadian friends, about a year ago, Equifax Canada reported that 50% of working Canadians were living paycheck to paycheck. And then we have credit realities. So if you need to apply for so you don't have the cash to pay the bill, you don't have a large reserve account, and now what about your credit score? Well, this is data that was published by the Consumer Finance Protection Bureau. And you can see at the bottom, and I know this is kind of a busy slide, credit invisible at the bottom. That's saying that 11% of Americans are credit invisible. Another 11% are really unscorable because they have a thin or a stale credit file. So imagine an older pet owner in your community. They paid off their house years ago, but they're living on a fixed income. they're not going to show up as being able to be scored. They just have too thin of a file. So that's 22% of the US adult population. And then you start looking up at what percent of the population falls into deep subprime, where, there may be a real challenge to be approved for credit, whether they're trying to expand their limit on their credit card or they're applying for credit to pay a veterinary bill. I do want to say this is not the only thing that goes into those decisions that the companies do, and that a lot of companies are starting to look at what they can look at outside of credit scores, like accessing your banking and have you never bounced a check, or how do you handle your bank account or your utility payments. But a lot of it still depends on these very basic measures. So significant number of people, 40% of people, pretty unlikely to qualify for credit. And then we have serious equity issues. And this is a conclusion in one of the CFPB's reports, that having limited access to credit is disproportionately borne by Blacks, Hispanics, and lower income consumers. So in summary, financial barriers include lack of payment mechanisms. It's actually called a failure in a market in economic terms. It's a market failure if we don't give our consumers a way to pay for things. And financial barriers are the top barrier to accessing veterinary care. So common payment options in veterinary medicine and the rising cost of vet care, combined with consumer realities of financial fragility, not a lot of money in the bank to absorb a shock, living paycheck to paycheck, how many people can't access typical credit, and we've got a real gap, and it's causing a lot of pain in the system. And the good news is that we do have opportunities, and we've been doing a lot of research on this at Open Door. We know many clinics, and we've been working with clinics to expand payment options and their use. But today I'm talking a lot about the study exactly itself. So we published one. This is it. Amy's going to drop the link in the chat. So we published this in Frontiers in Veterinary Sciences, and we looked at 6 years of payment option data and offered implications from that. Our research interests were beyond cost. What do expanding options offer for mitigating financial barriers? Can we try to quantify what that would mean? And what does this mean for the veterinary provider themselves? So we reviewed exactly what we just went through today. So in that report, you can see some of the citations and statistics too. And then we had 6 years of data from a company called Vet Billing. Vet Billing is, you could think of it as a third-party payment plan manager. So the clinic is paid as the client pays, but the decision is in the hands of the clinic. The terms are figured out at the clinic level. So someone might say, I can't pay in 7 months. That monthly payment's too high. The clinic can offer them 9 months to pay it off. But Vet Billing handles all the management of the payments. So we had 6 years of that data, and we analyzed it. We profile it, all of it in the report. On a subset of data, some clinics use an enhanced tool at Vet Billing to get a credit score recommendation, and that kind of helps them decide how much to ask for down, maybe what kind of terms to offer their clients. It gives specific recommendations even. So on a subset of data, we even had that CSR score, and that's what we use to build a proxy in estimating how many more people could be helped when these tools are brought online.
Heather, we're at 20 after the hour.
Okay, really? Yikes. Okay, so we didn't have a lot though in this study. I'm going to skip by this slide pretty quickly, but we didn't have like the consumer information. We don't know what alternatives they would have faced if they did not have this tool. So the analysis, we profiled the data, we analyzed the non-payment, we looked at that soft credit rating score, and we introduced a multiplier. So we had over 20,000 records total. With that soft credit rating, we had about 2,500, and we very specifically looked at the lower ratings to say, we think these folks would not have been able to access traditional credit. So what did we find? Well, we found a multiplier of 14.5, which means 6.9% was not paid back to the clinic. So if a donor gave your nonprofit $150,000 and you peeled off $50,000 and said, we're going to reserve that for true subsidy for the unhoused programs and other programs we do, and instead of just providing $100,000 of care, and again, in a community where these expanded options are not available, and we served the people who could not, otherwise access credit, we could provide $1.45 million of care, because 1.45 million times 0.069 not paid back is that 100,000. So really powerful to add this in a community where expanded options are not available. So we found it to be really powerful. And that common solutions in vet med left a lot of situations unaddressed that these could be very impactful for. Thanks to PetSmart Charities, who said, yeah, we also want to know more about what alternatives people would have faced. What are some other implications for clinics, and have more of a live interaction during the data collection period. We are doing 2 phases of research with a company called Verity. Verity, in phase 1, we offered clinics the ability to use 2 plans. One offers guarantee of payment to the clinic. So if the client stops paying, the clinic is guaranteed to receive payment. They could also offer a true payment plan, which was a third-party managed plan. It's a little cheaper for the client, but there is not then the guarantee for the clinic. We have what the clinic's behavior is, payment results, and we have information on clients, including those last 2 points, which are so important. Why are you using this tool? I was turned down for traditional credit. I didn't want a hard credit check, whatever it might be. And then on a Likert scale, very likely to not at all likely, how likely would you be to face X in the absence of being offered this payment option? And this is surrender my pet to a shelter, forego care for my pet, seek care elsewhere, euthanize, put my pet to sleep. So what negative outcomes are we preventing by adding these? We are going to publish this in 2025. Just very quickly, 9 out of 10 Verity accounts set up by the clinics were the guarantee plan. Veterinarians are not very risk tolerant people. So despite our earlier research, which we were super excited about, people wanted that guarantee plan, even though we, with the study funds, could have guaranteed a certain amount of the non-guarantee plan. The average term was between 9 and 10 months that clinics set up. And that's powerful because a lot of the options, as we discussed in the beginning, offered in communities are the 6-month plan, because clinics face a higher merchant fee after 6 months with some of the traditional options. So that payment is too high for a lot of people at the 6 months. When it gets spread out over 9, 10, 12, et cetera, it becomes more affordable for people. And we have really strong results that payment options prevented the undesirable outcomes. And that's for the clinic and the client. Of course, the clinic cares about the client not doing economic euthanasia, but it's also things like, I'm going to go seek care elsewhere. I'm going to treat my pet myself. I'm going to provide less care to my pet. So this is new business activity for clinics. And then, of course, preventing negative outcomes like giving up animals, economic euthanasia, et cetera. We're seeing very high results, even for the very likely to have faced that. Phase 2, we're going to publish early next year, and we are combining a veterinary fund and the Verity guarantee plan. So now we've already triaged that first group of people that just needed a non-credit option that enables them to pay over time. Now, what if we say, well, how much money do we need to subsidize to get you to a payment plan you can afford? So maybe you're dropping the price a couple $100 in some of the cases, but people are still given the opportunity to pay for the vet care with a tool that they can afford. We're working with 3 leading nonprofit clinics on this. We're super excited. They are meeting clients with affordable plans that guarantees payment to the clinic. Again, sustainability in this expansion of access to care. And we have clinic behavior and the scale on alternatives based. So early insights, again, the study is actively underway right now. We are collecting data. We're only 9 weeks in when I pulled down the data for this talk. They've done 115 contracts. The average term is longer than what we're seeing in the earlier phase, so people are needing longer terms to pay it off. The clinics are varying how they use their funds. One is an emergency clinic, and so they are using it to help people get that even, you know, in that range of care to be able to work a little bit more towards the care that would be more preferred. And one clinic that is participating was not a part of phase one, and they've written $30,000 of care in 9 weeks, and only $1,000 did they feel they needed to apply on 5,000 of total payment option dollars, because so much was being picked up by the regular option. So it's really exciting to see. We'll have a comparison so you can look at what do these different plans look like. You're able to contact the companies, ask them for nonprofits or clinics like yours that they work with, certainly, and we are happy to answer any questions that we can. But we offer an example that compares how much does this cost the client? How much does this cost you? When do you have a guarantee of payment? When do you don't? I think we largely did. Setting up your internal processes for this are obviously important as well. Please reach out to us at Open Door. We also have an online course and other materials to help with this. But, when you're going to use the tools that pay you right away. And Care Credit, I just want to say, for people who like it, they use it for their dental bills. They have a, following. It works for some clients, and clinics are paid pretty quickly, but a lot of people are left behind by tools that are common, and that's why we recommend looking at Verity's vet billings and leveraging your donor dollars, normalizing the conversation, opening this up to people in your clinic. Amy never gives me time to talk about my P&Q charts and economics, but essentially we shift out a demand curve when we fix a market failure, which means you haven't changed your price. We didn't drop pricing, especially for those of you that are doing such great pricing already, but we are able to shift out a demand curve when we fix a market failure, which means there's more quantity demanded of veterinary care at any given price. And here's all the different payment options out there. We're going to give you some questions to think about when you're picking yours, and question and discussion. Want to make sure to leave at least a few moments.
Thank you, Heather. I know this is a hot topic, and I just want to say to everybody, we do have at Open Door, thanks to Maddie's fund, we do have a limited number of financial triage plans where we will actually help you with everything Heather just talked about. It'd be Heather and I, it's our favorite topic, where we can actually help you set this up for your clinic and tell you what would be, what are the best tools for you to use, what based on your philosophy. How can we help you choose this? We'll train your team. We'll work with you. We'll give you templates and marketing materials. I did put the link in the chat. If you want to apply to that, it is pro bono, and we have a limited number of those. And we also do have a course on this. So if you're interested in more, we have an online course where you can learn more and delve into this. And Heather can really get into more of the how you multiply the dollars. So given that, and we just are at the 1 minute, I did just kind of want to wrap up to say, thank you so much for watching this. And I'm so excited about this research and what is coming out, because there really hasn't been a lot on this. And Heather's really been leading the way with this. We also, Heather will be available on Maddie's Pet Forum to continue this discussion. So please make sure that you jump over there. If you have any questions that didn't get answered, you can always reach us on our website as well. Like I said, we do love to talk about this. So we do have another one of these topics coming up next month, where we will be talking with neighborhood pets and how they kind of work in their community to really do a One Health approach. So we will be sending out more information about that. You will see that link coming up. So we hope you will join us then. But until then, we will see you soon. And thank you so much for joining us.
Thank you.